SmartX is the first DEX with a real solution to impermanent loss. SmartX is transforming the DeFi landscape, catering to liquidity providers and smart traders who want to benefit from low fees. Farm DeFi highest APRs and trade effortlessly on SmartX.io.
Good afternoon, everyone. BC Richfield here, coming to you live from London. It's gone a couple of minutes past midday here, making it just gone UTC. Amazing to see so many of you on the stream already. Nit, lovely to see you. Erica, how are you doing? Lovely Kelly Barker all the way from New Zealand as well. Who else? I know we'll have hands in the chat somewhere. There he is. Good day, Hans. Absolutely loving that. Our good friend Whack as well. What an absolutely beautiful full house to come into. It's awesome to see you all. Pisquit as well. I see you down the bottom there as well, sneaking in, mate. Great to have you all here. And Sambuca 1977, back again, mate. Nice to see we've lured you back in again. It's awesome to have you here, guys. So, what I want to try and do is I've just basically got a chart up at the moment. I just finished a mentoring session with someone, so I haven't really got a specific chart or anything in mind, but what I did think would probably be quite helpful for you guys is, especially for a lot of the patrons of the site as well. Bernd, hello, mate. Because we get so many of you guys, legends in my eyes, certainly, and that the nest that come back every week to listen to me drivel on. I'm just trying to think how I can always make it ultimately value for you, because I appreciate I go over a lot of educational stuff, right? But I do know that sometimes I kind of repeat myself. So I think I want to try and get into the process of kind of getting through more charts with you guys, especially on a Wednesday, right? So I think I just want to kind of get this going. And I think what I want to do is look at assets that maybe you guys want to look at. If not, I'll pick some at random, mixture of altcoins, equities and FX, right? And then from there, I'm just going to kind of just get everything off the chart, rip into some top downs, kind of get in the mindset of how I'm kind of looking on a daily basis, a 4-hour basis, hourly, 15-minute, all the way down to the execution timeframes. Oh, brilliant. Yeah, S&P, NASDAQ, Forex, everything that you want, Pisquit. You know, if you've got an idea, mate, of something you want to cover, then you absolutely throw it forward. And we'll just churn through as many as we can. Now, obviously, sometimes we do get a crazy amount of requests that can't always be serviced, but basically it is, I'm just going to try and get through a lot of them for you. So just because you've got it in there at the moment, Pisquit, should we just take a look at the S&P 500, right? I'm just going to do this on the XPX 500 USD chart. It's on Oanda. You can do this on different ones. But yeah, absolutely. So Tesla, let me just make a note of this. Tesla, we'll look at NASDAQ, any FX pairs as well if you've got them as well. And straight in, good question here from Bernd. Why don't you use pivots in your trading? So in terms of pivots, do you mean sort of pivot points in terms of what we're looking at as key areas for kind of support resistance flips? Only the 100x coins, please. Yeah, absolutely. I think I'd have to bow in judgment to our fundamental team on that front. I think actually what I promised myself for this upcoming bull run that I'm going to do a lot better is kind of invest better, because I basically traded. I've traded all of the bull runs that I've been involved in and not really kind of got involved with those. So no, as in levels, right? Okay, so let's dive straight into that, because education for me will always take focus, and I think it's something that can be a lot of value for everyone as well. So let's clear these up a minute, get rid of all this old jazz on here. Let's have a look. God, you can see how long it's been since I used this chart. This is painfully out of shape. So what we're going to do is we're just going to get all of this, and then we're going to just go old data. That way. There we go. That's more like it, isn't it? Yeah, so let's look at this in terms of levels. So yeah, TT Trade just seems like a really solid guy. A couple of people to me have kind of said, I had just mentioned about, we kind of crossed over a few times on Twitter and a few other bits and pieces networking wise, and kind of seemed like a really, really solid guy, and apparently just does really good condensed parts of ICT, which I think can be really helpful for people. Now, don't let that put you off getting really deep into the core material, right? Because there's a lot of hidden value in there, some gems, but it does take a long time, and Michael does rattle on a lot, by his own admission. but there's so much value hidden in there. But when someone sent me this stuff over, I get a lot of people send me stuff with ICT, as you can imagine. I know a lot of it's fine, but a lot of it I think misses the real core concepts of what you really want to learn. And I think the stuff that I watched from him, it reminded me a lot of my early kind of core notes where I was trying to kind of simplify it myself. So anything to make your guys' lives better, to be honest, or easier, if that relates to you, then absolutely. And I think he seems really solid. So in terms of levels, so if I'm looking at a chart, and what our good friend Bernd is asking here is in terms of pivot points, so just for example, we kind of zoom out here. Biscuit, that's a very, very, very good encapsulation of it. It is an adventure. You don't really know where you're going. There's ups, there's downs. When you really think you've got it, something else emerges, and a really, really, really knowledgeable guy. So, okay, let's look at kind of recency here. Now, whenever I'm doing this, and something you might find helps is I just get a horizontal line, hopefully you guys can see that really clearly, and I'll just move it around, right? Look, and focus on an area. So you notice I didn't start over here. Why didn't I start over here? Because it's just not really that clear. You've kind of got that, but price didn't really stop there, and you got that. I'm looking for these lows or highs that really align in clusters. So the first kind of cluster for me that I'm looking at is like this, right? So look, the key element to support and resistance to understand is that it's not as clean as a lot of times it's made out on the charts, right? There's deviations, there's illiquid moves by price, there's manipulations, all of these things to take into consideration. So a lot of people would kind of write this off because of this, right? But actually, we're only kind of placing this roughly here. We're on the daily time frame. And then as we zoom back, we can see, pardon my French, this has really got a lot of validity for me, right? Now, it doesn't have to have historical significance all the way back to the beginning of time, but actually when we look at it as kind of a rough area, we can see, look, what happened here? Price came up, even if we start all the way back here, right? Has an initial rejection. Now, a lot of people that focus on ICT will kind of be like, well, traditional support resistance, all that stuff. It's not rubbish, right? What's on the chart is a pure reflection of what's happened, right? So if there's a key area where people are really kind of buying in consistently, then that should be noted. Michael himself will say, for example, if you want a key validation for an order block or an array, especially an order block, it really should be engaging with some kind of traditional support and resistance area. Right, so yes, it looks a bit messy, but what's happened? Price has come up into this area. We've seen an initial rejection. It's come back above it again, but has it done so with any displacement, with any commitment and conviction? No. No fair value gaps in here. Then we get this nice pop up here, right? Now, we might have been caught on the wrong side of this because ultimately what happens, we take the high. See this, where we close back below. So what does that mean? When we close back below there, well, ultimately we're then looking for lower prices, right? Because we've shown weakness. Does that make sense? So our expectation here was we see this rejection, then we want to confirm if it's a deviation. So we're looking for the low, that took the high to be broken below, closed below ideally. That doesn't happen. Price then regains this level, but no displacement, meaning we don't get that energetic move with a fair value gap, right? Ultimately, price holds here though, takes out this high, and we do get our FVG. So let me just zoom in a bit so that's a bit clearer. So then we have got our fair value gap here. Now, a couple of things happen here. We're then looking for price to retrace into this area, into this fair value gap, to then go long. We don't. Notice how we close below it here. That's the first indication of weakness. Well, now if we make an allowance, so that then becomes an inverse fair value gap, So let me just clear this up quickly just so it's really nice and clear for you guys. So, it would definitely help if I clicked on the right bloody thing, wouldn't it? So, we've got this FVG in here. See that bearish one that's formed here. But before we get that, we've got this bullish fair value gap here, right? So, we'll just continue with this idea of doing our bullish fair value gaps in green and our bearish in red, and then our inverse fair value gaps in purple. So, the theory is this: support resistance level. We see the deviation, but we don't get the confirmation that price is rejected here because we don't get that shift in structure, right? And there's certainly no displacement. Price then pops back above, taking out this high, but fails to displace, meaning it fails to show us that energetic move that gives us the conviction to think the price is moving higher, all right? So we're going to get rid of these to clear this up. Then in this move here, price draws down, right, into an order block in here, yeah, or a prior consolidation, and then we get an expansion higher taking out this high, right? No matter what time frame we're on, down to the 15 in terms of this type of movement, we will always be using the same principles. All we're doing here is we're throwing in a high time frame pivot level or support and resistance. And this is how you can combine these factors to get to a level where you guys will kind of be like, oh, okay, actually, this system really speaks to me. Because I know a lot of people struggle with traditional ICT methods because there's very little visual representation of kind of support and resistance, where stuff like this, people can see, look, we're getting rejected, rejected, rejected. We start to establish this, and we can see as we start dipping in, right, look how price here is kind of, he's not really coming into it, violates it there, gets a bit of a recovery. Then this move here we like, because we're in a bullish structure now, we've got a fair value gap to target. Ultimately, this candle's close through that fair value gap, invalidates it as a bullish fair value gap, opens the floodgates as an inverse fair value gap. And then what's our criteria from here is we expect it to chase the prior liquidity, normally resting below the prior swing lows. Now, the other thing we can throw into that for extra conditions are that price is now closed here below this support and resistance level. So we can be looking for a deeper correction. Ultimately, price is coming down to target this fair value gap, right? But then when we show strength here, we can overlay the same principles again, right? So price is a bit confusing here. So what you would probably happen is you're short bias for the two reasons we said. Price sells off down to here. Now we're looking on the retrace here, yeah, for price to respect our bearish fair value gap. Does it? Does it beautifully, right? See how the bodies just don't close above it? So now we're saying, right, well, rejection at a support resistance level, yeah, we've filled our bearish fair value gap. So our state of delivery is we're looking for lower prices. Then we're looking to trade this down, yeah, as liquidity points, because we're on the daily, we're looking at the prior day's low or the prior day's low, yeah. And then ultimately for lows below that. So we see here, we get the rejection, holds, we're looking for short trades in here, we trade it down, we get a nice little scalp trade or a short-term swing trade into these lows, but price then recovers, right? So then let's always remember our recency bias, yeah? Meaning that now, where would we be looking for price to deliver for lower prices is this fair value gap, right? So when prices run this low, we'd love to see price come back to this fair value gap, look for our short setups, and then chase it down to this low via this one, right? What happens? We close above it, yeah? What does that do? That gives us an inverse fair value gap, right? Meaning that then we're ultimately looking for price to chase down the immediate liquidity resting above, which are all of these equal highs here, yeah? So we'll draw that across, and then we get that move above. Now we're in a bullish state of delivery. What we're looking for, aligned with our support resistance level here, is we get this strong close above, right? Now, what do I mean by a strong close? Same as this one here, right? This move here is a high volume candle. It has a lot of volume in the body, yeah? Meaning for me, that shows a bit of conviction. However, I haven't got a key parameter that I would need to enter, which is a move above with displacement, yeah? Call it a fair value gap, which would then allow me a point of entry. Yeah. So what can I then turn to? I can then turn to this support resistance line. If we're coming back to retest this, I know ultimately our liquidity is resting up here. Yeah. So as we come down here and we're kind of chopping around, we'd be looking in here and thinking like, okay, we've got the move above. We'd ideally like to see a retest of this area if we're looking at support and resistance, something to give us some confirmation that basically, think of it like this. So think of it like this, right? Big pool of buyers below. Big pool of sellers above, yeah? And don't worry about the depth or that of the areas. Just try to make these significant in terms of the point. So the seller's job is to get price back below this line, yeah? The buyer's job, so the strength and conviction of the bulls, is to keep price above it. So, you know, you're asking the question, who's winning between these two boxes, even if we're just allowing it for here? Holding, Price tries to dip below, strong rejection, comes to take liquidity above. Yeah. We then set this liquidity above here. Price then tries to get forced by the bears back into this area here, but ultimately is just getting pushed into another buy zone that then sees this huge bullish engulfing candle, which overtakes a massive bearish engulfing candle. Yeah. Always be looking left and realizing where you've swept liquidity, because that's where you're often likely to see a reaction. Then on the reclaim of this, we get something here that gives me a lot more conviction that we're going even higher, right? Is that we get this bullish fair value gap. Yeah. Then when we set this bullish order block, we close above that here. Yes, we've taken the short-term liquidity here, but strong close. Look at that. We've come above that. We've closed above the wick, closed above the body of the order block. So for me, I'm then zooming out, looking even further left here for targets that price can run to. All right. All the time, all of that has been framed around the idea of our support resistance level. Yeah. So if we then fast forward when price interacts with this again, all of a sudden we're saying to ourselves, okay, well, what do we need to see here? We need to see a move below with conviction to make us believe that we're going to see lower prices. Yeah. Ultimately, we get the opposite. Lovely pin bar candle here. Yeah. Bullish pin bar, chasing down liquidity higher up. Comes back down again. Yeah. Holds this level here. What do we get again? Bullish engulfing candle here. Bullish engulfing and pin bar or large bodied pin bar here. Price ultimately chasing down liquidity above this high, and this high. These relative equal highs are what rejected price. Now, focusing purely on the SR or the pivot level here, see that? Support. Price comes in, yeah, and has a nice strong reaction away. Yeah. So we overlay that here. Yeah. We overlay that here. We overlay it here. But ultimately, what's the difference here? That reaction's just a bit weaker, isn't it? Yeah. So we're a little bit curious. Then we can start saying to ourselves, okay, well, where's price delivering from? Yeah. And ultimately at this stage, we're bearish and we're delivering from this bearish fair value gap. We also have this order block. Now, forgetting the support and resistance for a second, if we wanted to really kind of think about this, or not forgetting it, sorry, but focusing a little bit more on this, is price is delivering from here. Yeah. And then they come down to here, busts up to there, and then drops lower. We can see here that price is struggling to get above that. It's struggling to catalyze the same bullish reaction. This bullish candle holds, dips back in, bullish, strong reaction, right? Now, we don't know here if this is going to dip back in and have a stronger reaction. But if we don't get this, we're looking at where price is delivering from, which is bearish. Then what are we saying to ourselves? Well, remember, like we said before, we go to our support resistance or our pivot level here. Price has come up. Now it's closed below, fine, but it did that here. What did it lack? Yeah, displacement in the move down. Yeah, so if we're looking in here, we're then saying to ourselves, okay, displacement, no fair value gap, no fair value gap, right? Our first one that we would be looking towards is here. That would be a bearish fair value gap here. So we'd be looking for shorts. Bearing in mind, we're still on the daily here as well, guys. So price interacts with it here. We expect price to first of all target liquidity resting where? Below the prior day's low. Yeah. Then we would be expecting it lower. However, we don't get that, right? We get two things here. We get this order block forms. Yeah. And then we get this bearish fair value gap become an inverse fair value gap. That's why we turn it purple. When this closes above, our immediate target is this high. Yeah. And then we're looking towards this order block, which ultimately led to this rejection. Yeah. And that's how we would trade up into that. And as we go through, we're just using this pivot level, this support resistance. Look here, you can see the rejections. It's not, for me, it's not just good enough to just have a close above. I want to see what price is doing when it closes above. So where are we delivering from here? Well, we get the state of delivery, or not the state of delivery here is bullish because we're setting higher highs. We've got this bullish fair value gap. So we're looking for price to deliver into this, which it does here. Yeah. Does it ultimately chase down this high? It doesn't. But is it still respecting the fair value gap? Yes, it is. Then when price draws into here, do we get a bullish reaction to this high? We do. I know that's a little bit small, guys, but you can see it here. But are we making this move above? Are we reclaiming this level? Is there anything, if we look at this again, that says sellers are here? Yeah. Is there anything telling you up here that the buyers are winning this? Or is it just merely being pushed up to keep getting rejected, pushed up to keep getting rejected? What gives us more conviction in this? When we inverse this fair value gap. We close below it here. Where's our first liquidity target? Is this low? Then this low. Yeah? So all we're doing is we're overlaying the same principles. For example, we have this fair value gap in here. We inverse it here. We attack these highs. But what we're doing is, as we're going along, we can see this bullish order block here is supporting price. Let me just draw that in for you guys, actually, just so it's clear. Yeah, that's supporting price there. Right? And we can just see, look, price getting supported here coming up. Now, yes, we inverse this fair value gap here and we're delivering from this one. Fine. So where do we chase down? When it closes here, we're chasing down liquidity below this low, which it takes, and ultimately then below these lows. As the state of delivery changes, we then zoom out, find our high time frame levels and targets, right? And then when we add in a pivot level like this, support, resistance, price rejecting, what do we get here that's slightly different? We get a close above. This candle's close shows displacement, meaning that shows the energy of buyers stepping in. For me, that's certainly how I look at it. And then we're chasing down these highs. Yeah. Ultimately, what do we get here? Price breaks down, closes below with what? With displacement. Yeah, the fair value gap. So we can look for price to get rejected at the SR level here, in line with our FVG, and ultimately targeting liquidity lower down. All right. So does that make sense, guys, in terms of how we would look at that in terms of pivot levels? And basically you're just doing these, and depending on what time frame you're trading on and that, right? You're just zooming out, and then you can see here when you have these interactions. If you really want the king, for me, is Trader SZ for his understanding of these levels. Then someone like Dante Bast is incredibly good, who trades with me. He uses volume levels though, and then my boy Dank. He's unbelievable with that. He uses more ranges than that, but his understanding of price levels, how it moves beyond and above is fantastic. So hopefully that makes sense and it wasn't too waffly. So we'll try and incorporate a little bit of this in our analysis now as well, right? So what should we do? Let's take a look at the current state of play. What's the session today? 27th, isn't it? So live 27th of the 9th. So recency, let's look at where we are right now, okay? So, I've been bearish on equities. Obviously, NASDAQ and ES are the ones that I trade, or this S&P 500. So we've got to ask ourselves here, or not ask ourselves, let's take a look and see if we've got immediately any kind of key pivot level. For me, there's nothing particularly obvious, purely because we don't have a lot of data here, right? Price is kind of coming into this level, but hasn't really kind of found much support there. You could, I suppose, make an argument of something like this, but really, guys, if you've got to force this, no. If you've got to force it, you're in a mess. It should be really clear. So there's no real key pivot level here for me on the daily, not in and around where we are. So I'm asking myself standard questions. Has price run a high or a low key liquidity area, right? And where is price delivering from? So if I'm looking at the next key liquidity here, I'm looking at this swing low, yeah, and an intermediate term low because it filled this fair value gap, price continuation upwards. But what have we currently done? Well, at the moment, we've taken out those relative equal lows here, right? Including that low and that low. Price came down, didn't exactly have the kind of reaction that the bulls would have been hoping for sure. We need to be aware of this fair value gap above us. I'll do that in red, signify that's bearish. But also the thing that I'm looking at here is this order block. Right? So what could we look at here? Well, we could say if price's ultimate goal is to take out the next resting liquidity here, then it would seem to make sense that price will either do something like this, yeah, or that price could possibly, on the form of getting a larger wick, do something like this, right? Because if we closing above this order block, now I place more weight on the fact if we close or violate a fair value gap. But even still, if we closed above this, I'd be thinking, okay, I want to see a bigger move into here and then see if we get the rejection, right? So remember, so that's our high time frame bias. That's on our daily. If we're now going to slip this down to a 4 hour, right, what's going to give me the conviction in here today? What would I want to see today? Or ultimately, let's take a look at, we're bearish here, right? So we've been bearish from all the way back here, but let's just focus on being under this. So our bearish setups for me, which I favour New York very heavily. Yeah. Let me just actually, sorry, I was just trading in this, so I moved it to New York time. So here we are. Yeah. So that's where I'd be looking for shorts here. Why? Because we're drawing up into this high time frame, array, in this case, the fair value gap. So with this one here, what I'd be a little bit more cautious of here, and why I would be looking for long setups here on a counter trend basis, is that we swept the prior day's low. Yeah. And when we look at this closer shortly, I think we would have taken some session lows in here as well, which I'm just going to do in yellow. Right, because we're just going to look at this, or orange. We're going to look at that when we zoom in, all right? Because session lows, previous day highs, previous day lows, those kind of areas, they're our real kind of key things that we're looking to target for liquidity purposes, right? In the same way that this day's high here, we'll mark that on. I'm not sure if that was run or not. Don't think it quite was. But again, we want to make sure that we're making an allowance for liquidity as well as where price is delivering from, because it can help us understand where it's reaching for. Yeah. So we were bearish here, right? Where's the start of only? So we wanted to look for bearish trades here as well. Yesterday, I think I posted on Twitter quite early yesterday actually that we were looking for lower prices here, chasing down prior day's low. So let's just mark that up. This will all kind of seem, it will make a lot more sense as we kind of zoom in to the lower time frames. Sorry. Okay, so we're going to look at that in terms of how we could have traded that. But what we're looking at the moment is to overlay the same principles we were just discussing on the daily to the 4 hour. Now, my belief is that price is in a bearish state of delivery, right? We've got this bearish order block here that's driving price lower. We could see a push up into this and price reject. But if I'm looking for lower prices on the 4 hour, I really need to be aware of this, right? Let me just label this up so we don't get mistaken on the times. So our 4 hour fair value gap, right? So now as we dive down into the lower time frames again, and we're about, give or take, about an hour away at the moment from when we'd be looking to trade the equities. If we get this drive up into here, right, then immediately we're looking for something like that. Unless we close above this, in which case we could counter trend a scalp, expecting a drive deeper into this order block, right? Does that make sense? Do let me know. And Sambuca, I'll absolutely come back to your question in a minute, mate. I'll show you how to do that with a Fibonacci rather than just kind of drawing two individual boxes. So on the H4, what else would we need to be aware of? The prior day's low, yeah? So we can pop this in there and then look at our prior day's low. No, not prior week's low. Prior day's low, okay? So does that make sense to everyone? Yeah, do let me know if it doesn't, or you want me to go over anything in a bit more detail. That is no problem whatsoever. I just want to make sure that I'm kind of conveying this clearly, because the biggest struggles I do see people have is with decanting all this. They either have tons and tons of stuff on their chart, yeah, or they're considering every little low time frame order block or fair value gap, and basically just you end up in just this ultimate state of confusion. So as it stands at the moment, my bias is bearish. So I'm looking for price to deliver from a 4 hour or an hourly fair value gap or order block, right? Or all the way down, if necessary, to the 15-minute to refine it. Yeah. So from here, you can look down to the hourly, because all you're doing is, right, you don't forget that bias. Just because the hourly looks more bullish, you're not saying, oh, brilliant, I'll just flip bullish now. Let's remember our green line. Yeah. That's what we're looking for. So now the hourly just gives us more data. We want to see this turn bearish, right? While we see this on the hourly here doing this, going do 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 do, I'm bullish, 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 bullish. Yeah, we don't want to just blindly fade that, right? That's the hourly, right? This is our H4. This is our daily. This is what we're looking at. So for this, the key thing we want to see is what we were discussing before, is price drawing into an area like this. Then we want to see conviction in the fact that we're looking for lower prices. Yeah. So what I'm looking for there is saying, okay, well, price comes in, we've had this little nibble, right? We're just at the beginning. Hang on, let me change this back to equities because it's currently on FX. Did that work? Hang on. Oh no, I know why. Changed the wrong bloody session time. That is going to be 8:30. That will remain at midday. There we go. Right. So that's literally, if you're trading FX, then for me, New York session, you want to be taking that from the session start, which is 7 a.m. their time, midday my time. Equities, I'm starting an hour and a half later. Right. So pop that up. What do we want to tell ourselves here? Well, we're just kind of telling the same story, right? So if price is rejecting here, we want to see a few things, right? We can see, is it rejecting from this hourly fair value gap? No. What else can we do to monitor this? Well, we can look at this leg down here, yeah? So this kind of leg, this displacement leg or a dealing range, I think ICT would call it, in which case we would just overlay our premium discount. And this will give me a nice chance now, Biscuit, to show you how we do this. Right. So at the moment, we're still favouring long setups because we're down in discount, yeah? What we want to do is be shorting from premium up here. So let me just open these settings for you. Right. All you need to go on to, right, is go down here and then see this, use one colour, and then you can just change the background. And then you can make it really kind of bright or just kind of dumb it down a little bit. Yeah. And then basically it just allows you, see these? See, I've got the 1 as green, the 0.5 as red, that. You can just use it as that and then make sure you've got your background color in there. At the moment it's set on reverse, but that just changes the green to the red. So I hope that makes sense, mate. Let me know if it doesn't, and I'll just run through it again in a minute. So look, the fact of the matter is we might see a rejection here, and price could very well come down and go for that. But what I would prefer to see is price get up into this area here, which is also aligned with our 4-hour fair value gap, meaning that we get a deeper move into this. Then we can monitor and look for the breakdown, because ultimately here, price is showing a little bit of weakness, right? And I'll tell you as for why. So we had this bullish fair value gap here that was green. Then when we closed below it here, this turns into an inverse fair value gap, right? Now what we've done here is we've also added this fair value gap over it, which is a bearish fair value gap, which we'll do in red. So we can see that at the moment, price is kind of rejecting at this key area on the hourly, right? We have kind of dipped into premium, yeah? So maybe the short here is valid, but for me, I'm not in the New York session. I don't want to get chopped up. But if we saw that move slightly higher up here when I was in my execution session, that's what I'd be targeting. I'd then be going down to the 5-minute. Let me just show you a previous example. Doing it one of our prior red arrows. Yeah, or just to show you basically just what the price move would look like. So if we're looking even at a bearish one here, we can see what happens is we're bearish because of our red arrow. What are we looking for? We're looking for price to drive up, yeah, and give us some kind of reason to go short here. Ultimately, the reason I wouldn't have taken this short is because we hadn't run that session higher, the high of London, also the high of Asia, right? They're always a nice bit of extra conviction if you're looking to trade that, right? So if you come up into here, imagine that we had run that session there, yeah, or like with this one, see how we've run this low? Remember I said to you that this would surely represent the session low. Why? Because look, before New York starts, If we go back to the beginning of the day, that was the low set in London, right? Then that low swept it, but still before New York, right? So then what we're looking for is conviction here. Price runs the low, take out this low. What do we need to see? We need to see a shift in structure. Yeah, and let me draw this in for you as well so you can make sure that's valid. There's our structure shift. What do we want to see in that structure shift? We want to see displacement. Do we get it? We do. We get this beautiful fair value gap in here. And if we make an allowance for this leg, here to here, yeah, is our fair value gap down here in premium? In discount, sorry, where we want to be longing from. We want to be short from premium, long from discount. There we go, right? And ultimately, what would we be doing here? We'd be saying to ourselves, well, our invalidation is we're above this order block, that should hold price. This fair value gap should fill, and then we'd be looking for higher prices. So what can we do? We can put our entry on here. We can put our stop loss below this low, always a few points below it, right? And then what we're saying to ourselves is, okay, where's our first kind of real key point of interest is going to be this. Yeah, which is the session high. That's how we would look to decant this. Now, I know this is a long setup example, right? But that's what we would be looking for, something similar on here. Yeah, is how price is moving. Is it showing displacement? Has it run a key level? Is it respecting structure? So, yeah, it is tricky. Did that answer your question, though, Zambuka, on these boxes? So basically you just get a regular Fibonacci, fib retracement, put in the 0, which I in red, 0.5 in red, which are just these lines, yeah? And then the 1 in green. Then I just go on to this, and you want it set up with that red and green split. You should just be able to do that automatically. And then you just want to click background on, see how it disappears there? Click it on, and then, like I say, you ultimately make it as opaque or as obvious as you need. Yeah, exactly right. So then you just go on to here, and for me, I've got it saved as PD. Yeah, good little advice there from Nitpar. As you'll see from all of these, it's just you save them down as templates, and then it really kind of helps overlay it. So, quick question here from Nit as well. How do you determine how far into the FVG you go? Sometimes it just wicks and bounces. Other times it will body or candle in deep and bounce out. How, that makes sense. Absolutely makes sense, mate. So let's find an example. Right. Let's just zoom out for a second. And let's just find ourselves something nice and clean that we can assess here. So if we look at our H4, and actually let's just use this as an example. So let's just get rid of this for a second. Right, in fact, I mean, we can use any of these really. Let's go recency so that we're not cherry picking, yeah? This one. Thin, but no less valid FVG here. Bang our replay on to just take us back to here. So in terms of how we're looking for this for validation, we have to wait for the candle closes, right? So while this is our bearish fair value gap, our expectation is for the state of delivery to remain bearish, yeah? And for ultimately for us to be chasing down the prior day's low, yeah? That's going to be our first target. Then we're going to be looking for session liquidity as well. Right, so does that make sense? We've set our bearish fair value gap. Our expectation is for price to come up to here, wick into this, yeah? And then ultimately reject. But we don't want to see any body closers above. Until we get body closers above, right, then this remains bearish, right? So we're only looking for short setups. And just to help kind of put it, awesome. Yeah, let me know if you get on with that all right, mate. So As soon as we come into here, now bearing in mind that we're looking at this in terms of you might be trading different sessions, right? So we won't focus on session times immediately. We're just saying from this point, this interaction with this fair value gap, we're looking at what points we want to respect. So here we see that closes, no reason to change delivery. That, still no reason to change by 6 a.m. And ultimately we then get the sell-off, yeah? So if we're now dropping down, let's just say for argument's sake to a 15-minute, I personally really like executing on a 5-minute. But again, this kind of stuff is obviously completely up to you. So what you're looking for here, let's say, for example, we're trading London. Well, although this has come above this for the H4 fair value gap, it's not closed yet, right? So our expectation has to be for lower prices. Yeah. So initially, we were looking at that. Now, let's say we come down in this London session and this drop is just far too aggressive for us to get involved in, right? We don't get the retracement. However, we do form this. Yeah. Again, you see, this is on this time frame. This is a 15-minute fair value gap. Now we're looking for the 15-minute candles to respect this, right? And look how all the bodies are kind of tied in this area. Yeah. So then if we're willing to drop to lower time frames, we can say to ourselves, well, if our belief is that price is still in a bearish state of delivery, and our belief is based on fact, right? Not on, I think it's doing this, is based on not fact, but our set of parameters. Yeah. And our set of parameters are telling us we're still bearish. We're delivering from a bearish PD array. Yeah. And now we're looking back here. We would look back further to see if there's a key level below us that we can hunt liquidity. But let's say that there is. Yeah. Now, this here becomes like our 4-hour was here, except for this one, we're going to drop down onto a 1-minute chart. Yeah, so think about it. We drop from a 4-hour down to a 15-minute chart. We're looking at similar kind of leaps here because we're setting our bias on the high time frame. In this particular example, yeah, the high time frame is this. And then we're saying, okay, well, we run price here. At what point do we get a breakdown with conviction that we would want to get involved in? Yeah. So the 15-minute would have been set over here. Price drives into this. This would be our first potential trade set up here. Yeah. So actually, we're quite fortunate here that this one keeps us out. Why does it keep us out? Well, we have a small sweep here, which is fine. Right. And then price comes up. We set the higher high here. Right. You'd be looking at this really to be your shifting structure from the lows. So then when we had this displacement down here, you would want a smaller displacement and then price to return to this fair value gap. Now, again, this is down to you, your testing, and what your parameters are. But for me here, the risk is when you take these lows, see all these equal lows? You just kind of highlight them. And I'll just so you know, I'm just going to abbreviate this as EL. Yeah, I do have equal lows written on the chart, but it's actually written out as equal lows. So it'd just be too big there. The risk here is that price has already hit this kind of interim target. So all we can do here is risk another short setup from in here, right? And let's say we did. Then our conviction is that we're coming down for these lows. Look at those equal lows down there. Unbelievable, right? For people that don't think that liquidity is engineered. So we come down here. We've taken this. Now let's say, and we'd be within our rights to do so, that our trade parameters were saying, well, actually, we're just looking for price to retrace into here and then go lower. Well, first of all, we're on a very low time frame, right? So, but let's say we took an entry here and said, well, where's our risk? Risk has to be above this high here, yeah? So we can only enter here. We'd be tagged in on the second candle. Where's our risk got to go? Or not got to, but for me, it's up there. And then we're saying, okay, slightly high risk trade, but we've got like a 1.69R, yeah? So we go in for this, we reject, our stops are taken out above here. Before that happens, right? Before that happens, we check the state of delivery, yeah? And the state of delivery is very simply telling us this, right? That when we close above this here, that we're probably wrong. Now remember, this is the execution time frame. We would be using our 15-minute as our guide. This is our 15-minute fair value gap. Has, however, our high time frame bias changed? No, it hasn't. Yeah. So just because we're wrong here, and let's put that back in so that we're fully aware, no, that was a stop out. We're minus 1R. So let me just draw that in over here. So because of that, we're minus 1R, yeah? But it shouldn't change our conviction. Like, that's the thing, when you get into the lower time frames, price really does chop around. So look at this execution that we're having here. All we're saying to ourselves is, actually, do you know what? We just got into the move too early. That's not a problem. Why? For me personally, why I wouldn't be taking that is because I'm just not in a kill zone. So you can see here, prior day's low was run here. If we were just playing liquidity games, right? Prior day's low is run here. We get I believe, a slither of an inverse fair value gap here. We then get this bullish fair value gap here. Now we can see the state of delivery changing. Now, when we make this move higher, we can look to get involved here, pushing higher on a counter trend basis. Why am I saying that? Purely because we ran the prior day low and we were in the London session. Why are we getting a bit more chopped up here? Because we're out of the session trading times. But that's ultimately your decision to make. Touche, you beauty. Good morning to you too, my friend. So our conviction is, like we said going into this, we're not paying attention to the kill zones at the moment. That might not be your bag. That might not be what your testing tells you. You might really be looking for this sweet spot. So our high time frame bias doesn't change here, right? When we zoom out, we haven't closed back above this, right? Remember, we're using the 15-minute at the moment as our high time frame, yeah? So have we closed above this here? We haven't, yeah? So our conviction is still bearish. Fine, we've been stopped out here of a 1R trade, but that doesn't matter. You know, people, and not saying you guys at all, but as a generalization, people need to kind of detach themselves from this fear of being wrong and just desperate want of being right and focus on being profitable over time, right? So we've not been distracted. We've been stopped out for 1R, but we're students of the markets, right? Think of it like this, and this was taught to me by an incredible person who's sadly not with us now, but one of the greatest shark divers and DMs that's ever existed, who I had the pleasure of diving with out in Protea Banks a number of times in South Africa, which is really wild. And she would dive in the water one day and literally never seen someone get back on a boat faster. And because there was a freaking huge mako shark down there. And she said when she looked at the mako shark gave the threat behavior where it kind of raises the dorsal fin, then the arches the back a little bit. So she got out of the water. And occasionally they have these kind of scary interactions with sharks. I've never had one. I've always been very fortunate. And as long as you treat animals with respect and you understand their behavior, you're going to be fine most of the time, right? But when she came out, she said something to me and said, fuck, someone said to her, Jesus, what have you got tagged then? She said, actually, one of our guys was, really lightly kind of, had a little nip a few months back. Said, it's the tax that you pay for being in this beautiful industry. Said, that's the risk, right? And I love that saying. So for me, I've paid my tax here, right? My theory, I believe, is still right. Why? Because it's based on the high time frame. This setup didn't work, but I'm still intact. I just see that as the tax that I'm paying to the market, and I'm ready to get back involved. So what do? We get back on the horse and we say, okay, this is now corrected higher. Here's our sweep. Nice. Okay. Then we're saying to ourselves here, okay, where's this? Now you might consider these equal lows here. Yeah. Which perfectly valid. So you would either have that as the break of structure or you would be looking and focusing on this. Either way, this is the area that we get our displacement, right? Now, remember what I said. Yes, we've taken this interim low here, but we've left this one. And what's so intriguing about this one that we don't have? That's a single low, right? So we'll mark that in, but we'll do that with dotted lines, right? Why we were worried about this reversing price was equal lows, right? Engineered liquidity, which is often such a key target for price. So we're going to do that one, but we're going to do it slightly thicker. So when price breaks in and we get this huge displacement move, something I'm saying to myself here, right, is that when price broke down to here, this original point of breakdown before we took out this low, yeah, then obviously I'm looking at this and I'm saying, okay, if this is my premium discount, this is my fair value gap up here. So that's the first one where I want to be involved as a seller. Now, as price obviously runs a lot deeper down to here, you're bringing other fair value gaps into play as well, right? But I'm very much on these deeper corrections, focusing on this initial move. Now, I'm not saying that's right. I'm not saying that's what ICT teaches. I'm saying that's how I trade it, because I want to keep my risk to reward at the maximum. So I'm 1R down here, but I fortunately get tagged back in here. Where my stops got to be, have to be as a minimum above this swing higher. Yeah, quite often as well, if you're very close to another swing high like that, if you have a fair value gap in here, I'll mitigate that risk by putting it above this swing higher. There's no FVG in here, so we're safe to go above there. Whereas our initial target is here. Yeah. And then we're holding a runner when we get below our initial target. And like we were talking about with pivot points earlier, look at this engineered liquidity. Now, if this is designed to reverse the market, then we would want to see a change in the state of delivery. We would want to see this fair value gap, for example. Yeah, if we inverse this, came back above it, I'd be looking at that for support and expect it to be chasing down higher. Yeah? Beast. Brilliant. I don't even know the ticker for OJ actually has. Pop it in the chat, mate. Let's have a quick look. That'd just be brilliant. But does this make sense, right? So now we're in here, but remember, that's our interim target. What do we do there? I'm moving my stop loss to entry, yeah, to mitigate my risk, and I'm closing some of my position down there. But these, remember, is our high time frame target. So while we're 1R down here, we've got a nice 5.7R trade there, and it doesn't need to be 5.7. It can just be 2R, and you're already back, to parity for the day. But let's not forget why we're taking those trades. Now, remember, for the purists among you, please don't email me and send me messages saying, you did that outside of a kill zone. What we're saying is we're just ignoring our kill zones for this, right? We're looking at a very stripped back version of just looking for those entries, right? So, yeah. I mean, that's it in the long and short of it, really. Now, I would always recommend, make sure you test these things, because if you really zoom out here, and do yourself a real simple kind of test, like something like this. Put on an indicator, previous week high and low, previous day high and low, yeah? And just look at how, when you've got a high time frame bias, well, you're looking for one of two things, right? I think this is quite useful, actually, right? Thank you, Hans. We're going to take a look at that in a second, mate. We'll close up on that, right? So I know it look a bit annoying because you've got this silly purple line around it at the moment. Well, not silly, it's just signifying previous week's high and low, right? But I just want to show you why this can be really, really powerful. So ignore that for the moment. Let me just turn that off so it doesn't become a distraction. Now, why are we bearish here, right? Because we had this up close candle here. Yeah, this down close candle here, we were expecting to support price. The order block closes above it here. What it ultimately does is set this bearish order block, right? We close below that here. Our expectation then is for price to chase down this low, this low, this low, and this low, ultimately this low, until it gives us a reason not to. How do we monitor this on the way down? Well, we just look at the other order blocks that are set. Price closes below this one here, well, the body does anyway, which I find significant. Price is then driving lower. Ultimately, at the moment, what are we looking for? We're looking for this bearish fair value gap. Yeah. And we're saying to ourselves, if price draws back into here, as we said before, we're then looking for this to potentially draw lower. So let's not lose sight of this, right? So you'll see this on my chart sometimes. So from here, big thick red line is I'm bearish. Yeah. So then as I move into the days that follow, and we can see that we have our, let me take this off for a second. Right, we can see that we have our days clearly marked out. We're looking for either a 4-hour or an hourly reason, which is a good way to test it from this point on as to why we would be rejecting. Yeah. So then as we've got this, we can see this order block. Look how it's rejecting price. We're getting no closes above it, even on a 4-hour scale, right? But we can refine that even further. Yeah. So we're bearish from here. We're only looking for shorts. Forget counter trend trading. Yeah. Forget it just for the time being. What are we saying to ourselves? Well, where are the up candles, right? Or where are we getting sweeps? Are we getting session liquidity taken? Yeah. Or are we drawing into a lower time frame premium discount array? So let me show you what I mean by that, right? So this is where we're going to bring on our previous day high, previous day low. It's coming into play. We're just going to zoom out. We're going to look at this on a 15-minute. I'd be executing this on a 5 in truth, right? But just to show you what I'm harping on about. I'm going to put on previous day high and low, previous week high and low. Now, I will only counter trend trade my high time frame bias if we've run a key liquidity pool. Session highs and lows, previous day highs and lows. So as we step into New York here, yeah, I would be looking for longs into this area on a counter trend basis, meaning half a position size. Why? Because I'm bearish. So ultimately, what I'm looking to do is I'm looking for shorts in here somewhere. But I can counter trade this because we've run the prior day's low and the session's low. Yeah. That's where the day started. Asia plays out in here. London's set here, coming into New York. We've run this liquidity. I'm looking for higher prices with a half a position size because I'm aware it is countering my higher time frame bias. What I'm really looking for, and don't feel like you need to trade the high time frame bias, right? I'm just showing you how I do this. So my rules are simple. I'm sticking with my bias, right? So in here, New York session where the blue box starts on a 15-minute or an hourly chart, I'm looking for, or higher if we've got higher conviction here as well, yeah, is where can price be rejecting from? Well, we got this order block, these order blocks, sorry. And we've got this fair value gap. We look at the fair value gap on the draw on price. We look for the order block to reject it. We then look for our structure shift in here and we look to trade it to the low of day. Yeah. And then further lows below it. Does that make sense? So now we step into this day. Has our high time frame bias changed? No, it hasn't. The big blue box, we need to see closes above this on a higher time frame scale, right? For that to be the case. It's not that. So what are we looking for here, right? We're waiting for New York, yeah, and actually the move took place in London, right? Why? Because that was the high from the Asia session and the session highs before. What happened? It was run in London. We got the breakdown. We took out low of day and the prior day's low, right? For me, I'm then not interested in shorting this. I don't want to chase my tail here. What I could do though, if I wanted to, remember the rule. We've swept prior day's low, which is signified by this line. It's simply just a continuation of this, yeah? And we've run all the session lows, which is this low here, yeah, or the low, sorry, before the New York session, which was exactly this. So now we've run that, we can wait for our recovery. But because it's counter trend, it's half a position size, right? And we're only looking to trade it into the next most obvious PD array. Now, we get our premium discount range. Right? Which is this leg down here. So then we're saying, okay, where can we trade this to? We're not worried about this order block or this fair value gap, right? Because otherwise we'd be worried about everything. We're looking for the first PD array, which is the order block, which is up here in premium. Yeah, so we can counter trend trade that move into here. Does that make sense? But only because the system says we've run the prior day's low, meaning that we've taken out a key liquidity pool. Yeah. Now we step into the next day's trading. Has our high time frame bias changed? Are we still rejecting from this order block? We are. So we're still only looking for bearish setups. Now, why does this give us a much clearer, and more obvious short? Well, here's our New York session time. Yeah. What have we done before this? We've run these highs, which were created before. So we've run the session highs. Now all we're looking for is, do we get a rejection with displacement, which we do here? Bearing in mind, I'd look for this on a 5 minute, but we can still see it here on the 15. Then we're looking to get short in here. Targeting where? Prior day's low, which comes down to here, right? Now, ultimately, we run the prior day's low here, but we run out of session time to look for potential counter trend reversals. Yeah. So stepping into this day, now we have continuation. We've run the session lows here, yeah, but we're in slightly dangerous territory here because look, price really sold off aggressively below this low. We're seeing nothing but weakness coming in. What we would need is a really clear downside target to chase this. But in truth, I would stay away from this purely because we're in the momentum of a big drop. Yeah, you can monitor these to see and make sure these hold. Ultimately, we do shift for lower prices, but we would need that conviction. Yeah. So where are we now? Still bearish, right? Where's our New York session? It's here. Have we swept the high of day? Yeah, or the session highs? We have here. Gives even more conviction, right? Do we break down with displacement? Even on a 15-minute, look, we can see it. There's the break of structure. Yeah, the market structure shift, sorry, right? Do we have displacement? We do. We've got our fair value gap here, right? ultimately, or we take this break with displacement and look to trade this FVG, yeah, or you can look at breaker blocks, etc. But it's just to give you guys an indication, and then you can step onto the charts and say, okay, well, what happened today? Did we get a rejection here? Well, we still wouldn't be looking to do anything but counter trend along here. But remember what we said. What's this? This is the prior day's low. What's this low here? That's the session low. Yeah? So that is, let me just draw that in for you very quickly. That's low of day. Yeah, that's what you see it marked at as on my charts, right? So what happens? Price takes out this higher. There's our structure shift. Yeah. Do we have displacement and a fair value gap in there? We do. So can we counter trend this? We can. And where to? Well, so that's being green. Yeah, where to? This. Remember, we had this on our high time frame chart earlier for the 4 hour. So that's, because I get asked that a lot. So I've kind of tried to cover a few things in there, hopefully. So I hope it really hasn't been convoluted, but just really zoom out and make sure you understand where price is delivering from on a high time frame basis, and it can make the rest of your lives a lot easier. So just very quickly, let's just take a quick look at OJX23. Hang on, what have I done wrong here? Hands, what have I done wrong? Let's go on Orange Juice CFD quickly. Let's just see what I'm just desperate to see. It is OJX 2023. You're right, Hands. Just trading view being a bit of a twat. So our daily up. Guys, remember as well from these sessions, I know I can get a little bit off topic. Unfortunately, it's a little bit of my ADD. I think I struggle with that, but the good thing is these are all recorded. They're all available for free for you through the Bird Nest YouTube. So please don't hesitate to rewatch it. If you've got any questions, get back to me so that I can really make it clear for you. And Hans could not have been more right about the rip that OJ is on right now. Wow. That's a monster. Really struggling to find any. Jesus, look at the quarterly candles. Christ, I love OJ as well, Hans. I'm really in a mess. If it keeps going up like this, I'm gonna have to stop drinking it. So, how would we trade this? Really, really quickly, just to finish this session up, right? We are obviously lucky you don't have ED and only ADD. Yeah, I mean, Christ, I probably wouldn't function. I struggle to function now, to be honest, Hans. I do really feel for people that have those kind of disorders because they're very, very kind of misunderstood, I think. And also can be a little bit used by people that don't have them to just explain why they're doing stupid things. Yeah, ADHD, yeah. No, definitely not. It's just more of a kind of semi-twitchy kind of borderline bipolar, I think, just attention deficit. So, okay, well, look, if we're just being really simple with this, here's our down close candle, right, which should be acting as our bullish order block. We've closed above that, so technically on this scale, I would say that we are bullish. We would need to see today close to create this fair value gap, in which case we would then look to trade that. I think the problem we've got at the moment is we'd be looking at a counter trend trade here today because we are we've taken the previous day's high. Yeah, prior day's high was in here, which we've now swept. Now, don't get me wrong, I don't think you'd want to be fading this. I think it's got so much strength in it, right? But maybe we get kind of a deeper correction down into this 4 hour fair value gap, which we'd be looking for a bullish reaction from. So we just draw that in, yeah. And then we just put our H4 in there to remind us that's our 4 hour FVG. From here, I then just keep drawing down until I get any kind of clear conviction. The other thing, obviously, that we would look to overlay is from this leg here up to here. This 4 hour fair value gap here kind of lines up quite nicely with our discount area, yeah? So we're looking for price to come down to be buyers at a discount, sellers at a premium, right? So let's leave that on there for a second and then look at the 15 minute. That's such a beast, isn't it, this? Just an absolute monster. Just, again, even still, right, we've taken the previous day's high, yeah? And now we're looking at this up here and we're saying, okay, well, we're just delivering from this, right? We're still just delivering from this. I think if we were looking for lower prices, my line in the sand here would be price doing this, closing below this, yeah, and then I would look for a little retest into a lower time frame, and then for it to kind of come into here. But I would be literally day trading this thing in and out as quickly as I could, because this has got so much high time frame strength about it. This isn't about trying to catch a falling knife. This is probably about maybe even just saying, okay, well, where's a nice kind of area of conviction? Maybe it's this kind of 15-minute order block here. If we get the opportunity, scalp something into this area here or here, but probably better set looking this area here to see if it's something that we can go long with. It is very, very insane. You're right. And no news about flooding or looting or anything. Don't know why the pump. Yeah, I'm not sure, mate. Something probably a little bit underneath all of that. Some kind of industrial area. We know maybe commercial production is facing issues. The cost of producing it might be going up. Import, export, maybe they see some kind of issue with that in terms of fuel levies and that going up. So actually the delivery of it can kind of drive price as well. But look, guys, I hope you found today's session interesting. I don't really want to keep you for much longer. It's already got a few over, 5-6 minutes over our kind of hourly session, and I know it can be a little bit long. I'm really sorry we didn't get around to covering Tesla. Whoever mentioned that earlier, we'll definitely make time for that on the next stream. But for now, just to say, keep an eye on the economic calendar as always, especially, it doesn't matter what you're trading, but keep an eye on that, keep an eye on your equity markets, really try and get and establish where the risk is pushing, what's the dollar index doing, what are equity markets doing. And apart from that, just to thank you for always being on the stream, guys. Obviously, Hans, real legend on here all the time. Nit as well. Touche, lovely to see you on here as well. Good friend of my dear friend Trader Dag. Sambuca77, great to see you back on here as well, mate. Who else do we have? We had Pisket on here today as well. Obviously, Erica Byrne. Lovely Kelly Barker, real stalwarts, all of you guys on here. And then I'm just looking up here, just make sure I haven't forgotten anyone that had to sneak out. Whack as well, our good friend Whack, always on here delivering the alpha, and a really good friend to the nest as well. So look, I hope it's been a useful session, guys. Just really want to wish you all a fantastic week ahead. Please don't hesitate to reach out if you're interested in any of the team's calls or being involved in the nest in any way. We've got a new pricing structure now to make it ultimately a lot more affordable for people, but there's also free trials available. You can become part of the free public chat. You can get our calls for free by signing up with our partner Bybit, and loads of goodies. But also remember, you can reach out to me on Twitter at BC_Richfield. It is always a pleasure to be with you guys. Just have a fantastic week ahead. Trade safe, trade smart. And you know what? If it's all looking a bit choppy and messy, or you aren't getting clear count, you're not getting clear triggers, just step away from the chart, tape read, as ICT would say, and spend some time kind of working on it and learning. All right, guys, have a brilliant week.